for joining us this evening. So let's look at this now. Both companies going through very challenging times. Now, we're talking about SCI that, as we know, traded above $3 5 years ago. Now it's half that. Submarine shares traded at about $2.80 just in 2018. It's definitely a tough choice for shareholders, especially for submarine shareholders. The counter has, plunged 2/3 since this deal was announced. How would you advise shareholders of both companies?
There are two massive dark clouds over that industry and the entire Sembcorp group. Number one, the issue of leverage, and number two, the slowdown that is coming from COVID-19. To arrest this situation, there's a $2.1 billion recapitalization that's on the table for the shareholders to decide on the 11th of August. It's imperative that they take this into account and look at the urgency of recapitalizing the balance sheet at a time of great stress. Without commenting on the specifics, I would like to highlight that these are the issues that are paramount in the consideration of investors.
And which way do you think that both companies' shareholders are leaning?
They would be leaning towards recapitalizing the company. The great advantage of a structure of this nature would be that out of the $2.1 billion, $1.5 billion would be utilized to pay down a facility, and the remaining $600 million would be used for working capital purposes. This is a very timely move at a time of incredible stress in the industry, and it's likely that the shareholders would be looking at it from a balance sheet recapitalization perspective and give that the full priority.
Well, this vote comes a week after Keppel's earnings, which throw Temasek's partial offer in doubt. So for SCI and submarine shareholders hoping for a consolidation of the offshore and marine assets of Keppel and submarine, what does this mean?
It's difficult to speculate on what Keppel's intentions are and how the whole thing would pan out. I would like to stress that there is about $12 billion of debt on the SCI balance sheet, which at a time of a slowdown needs to be reduced, and measures need to be taken for the entire group to move forward so that they can meet the challenges ahead in a timely manner. And this structure does seem to address that main consideration.
And what are the chances that the deal will fail? And if that does happen, what would happen to SCI and submarine?
There could be a slight possibility of it not going through. If this course of action doesn't take place, then the shareholders and the management need to sit down and discuss a strategy that would recapitalize the balance sheet using alternative means. It's unclear what those means would be, but this is what's on the table at this moment, and it's important for the shareholders to weigh the options very carefully and for the benefit of the company as a whole.
All right, thanks for your thoughts this evening. Nirgunan Tiruchelvam, the head of Consumer Equity Research at Telema Research. Just ahead.